Welcome to TradeTheMBI.com. This is Jones Reports for the 4th of June, and the bullishness continues with the magenta having moved back above after we were in our brief downturn scenario. Shakeout's still negative, so despite being on the positive side, I wouldn't expect a whole lot. It just means that we're likely to support on, here in the 76% or even the ABM green, given where things are. We still don't have a reset of the orange below red, so that poses a problem, at least from a bull standpoint, as to the level of excitement. So you can still get continued intraday drawdown, and to me, it's just more of a sideways configuration with a slight bullish up tint at this particular stage. It can accelerate pretty quickly if you see zero short activity, in this case, right at that edge of 10. So not exactly super quiet from a short standpoint, but still bulls have enough at this particular stage. The Nasdaq has been the one that's held it up, though we don't have the blue MBI crossover of gray yet, signifying a significant turn. And until that happens from a Nasdaq, you get a divergence between the S&P and the Nasdaq. And when you get those kind of situations, usually leads to a bit of back and forth because there's no clear defined area. The bond market believes that, of course, the economy is coming to an end. The Fed will have to ease dramatically, and so yields are now super low relative to what inflation that is. Though they see inflation easing significantly with this continued drop in oil, so Biden flooding the market here with whatever's left of the petroleum reserve, having an impact. Is it going to last long enough and will be significant enough by the time the election comes? It'll help quite a bit. Um, but rosy numbers coming in, just a month or so before the election, I don't know if that's going to be enough time. This should have been something they started before this increase back in March would have made a much more significant difference. And the reality is the concern is that as we see slowing develop, that can accelerate very fast within different areas of the economy, and sometimes you just get behind that curve and too late. By the time people recognize a recession in place, it's already been going on for 4 or 5 months at a minimum. From a euro standpoint, super excited from their standpoint as they see a massive move up. Though that'll be interesting because you got additional pressures potentially developing, even in Italy, where they've been receiving gas from Russia through Austria, and one of the German companies decided to sue the Austrian company that was getting the oil, which means they're going to have to pay them instead of giving the money to Russia's central bank, which of course then the Russians would just shut off the gas. That would be a major blow to their ability to produce power in Italy, and that's one of the few countries that is actually shown decent growth, so that would flip things around from a Eurozone standpoint. Not completely what they don't want, simply because they would prefer to be able to ease rates to help the banks, which are struggling significantly because they all bought ECB bonds at less than 1%, and we all know that current rates are not at 1%. So you're holding on to all this negative debt, which is the same in the U.S. The concern for the banking world right now is they're all underwater with the bonds, but the Treasury and them and the FDIC have allowed them to just declare them as being of true value, even though we all know it's not. But they figure, well, if we have enough time, we can get rates back down to where they'll be on the upside of it, and it won't matter then. It'll be okay. Everything will be all right. From a gold standpoint, that's just going to continue to drive gold to the upside. It's just a question of when those spurts will take place, and I think you'll see the same thing within crypto, and that things will muddle along while they still believe that there's a chance the Fed was going to be able to do some significant easing. But if it doesn't come to fruition, you'll see those explode. From an intraday standpoint, it was quite nice, pretty basic from our standpoint. So we come down here to our positive extremes, which would take us all the way to the low right here. And as soon as the selling started, where we had, and I always point out this, when you get the gray rise above particularly the 33, and that that when it flips over, as soon as you get magenta breaking down below, which took place right on this bar right here, that's the beginning of your downturn. And get a secondary signal when you have the white crossing over the red, and then it's just off to the races. And in this case, we just filled positive extremes. Not out of reasonable consideration for what we would expect from normal behavior from our view. For others, it's quite a surprise, and that's why the decline seemed so quick. But then again, the uprise was just as much. And then, of course, that was enough to stabilize things, and you got enough people moving short and put options that they start buying all the call options, selling the puts, and boom, you get to move right back up. So all clean, very simple, makes sense, completely within what we would see from the readings. You can see the turnaround began with that orange DOC dipping below red. At the same time, you had the crossover of magenta above yellow and the blue above the gray right there. And oh, massive short cover lift, and you're off to the races. But in the interim, when you're looking at intraday, there's a 5 minute chart here. You can see that cascade started right before the market opened, and as the market opened, right there, it just was a cascade lower, build in all that fear, and start acquiring as you get down towards the new low. You do one little spike to see if there's any additional sell pressure available, and when there's not, boom, and that's what happened. Clean and straightforward. We look at where we're at from a post-market standpoint, we had a couple of positive extremes right at the end of the post-market trade, and they filled those back in right now. So that's all clean and set. So everything's ready for the beginning of a new run to start the morning, and all the areas that needed to be satisfied have been. So all clean from that standpoint, and well within the readings. So we'll just continue to love that volatility as we expected. Would continue to increase and maybe not move so much as far as market total number, but definitely intraday. So there you have it. That's the long and the short of it. Anything relevant, I'll put it on the Skype chat for you. Have a good one. Trade well.